Okay, very good morning. It is Wednesday the 14th of March. To give you a quick overview, we'll have a bit of a recap of some of yesterday's price action, because fairly significant in terms of a sell-off in the US equity market in particular. A bit of dampening of sentiment amongst some latest movements with the Trump administrative team. We're also going to have a look at Mario Draghi. He is actually speaking live at the moment. And then we'll look at an update as well from Angela Merkel, which after, if you can believe it, was 6 months ago actually that we had the German election. And it was only, of course, as of today that she actually formally becomes the Chancellor in this grand coalition. Then I'll hand you over to Sam. He'll look at some of the charts and we'll go from there. So just quickly though, in summary for this morning, while Draghi is still speaking, I'll try and keep my side of things relatively brief. But what we're looking at here is both indices, so Europe and predominantly US, pretty big down day yesterday. To give you the percentage increments at the close, the S&P was down about 0.6%. Similar loss for the Dow, but the Nasdaq underperformed about 2 to 1. The Nasdaq 100 was actually down about 1.2%. A little bit of localized news for the tech space. You had Trump block Broadcom's proposed $142 billion takeover of Qualcomm on the grounds of national interest, which saw Qualcomm shares, obviously who were the initial bid target, fall about 5%, just contributing to a little bit of the divergence, if you like, between the Nasdaq and the others. But all three finished negative, and obviously the bigger excuse me, macro theme came from the fact that following the resignation of Gary Cohn, of course, this chap, I don't think he's got the memo yet that he's not actually on TV anymore. I'll leave you to caption the regular phrase that comes along with this image. But of course, who stepped aside next? Rex Tillerson is gone, so that spooked the market in the short term. Because, of course, he holds a very important key position for foreign policy as the US Secretary of State. And if you think about the past context, the dealing with Russia over the Syrian strike issues, the way in which North Korea has been managed so far, it has been usually the diplomatic methods adopted from Rex Tillerson that's helped keep a relative cap on the situation escalating beyond what's happened so far. Now that he's gone, and obviously this front runs formal meetings between the US and North Korea, it just meant that the markets in the immediate reaction got awfully nervous about what this could mean for overall foreign policy and the ability for Trump to really, not just for political gain, say some quite far-reaching comments. This could actually now start to translate into actual real policy. Now that a number of these key officials are leaving. Looking at this on a minute chart, this was the S&P, and I just had it marked up from yesterday, but I think it's just a good reflection of the reaction to these fundamental events. And initially you had, I'm looking at the S&P 500 here, and US CPI came in yesterday, and obviously we've been talking about this right from the beginning of the week, the importance of this piece of economic data in order to shape investors' expectations about what the Fed are going to say next week. Not that the interest rate hike is important. The interest rate hike is almost a done deal, priced in at kind of 85–90%. That's more likely or not going to happen. The key, of course, is the summary of economic projections and what the forward-looking trajectory of rates is thereafter in the dot plots. And a lot of people obviously were expecting potential this optimism could translate into a more aggressive or more hawkish stance, but obviously wage data disappointed the end of last week in payrolls, and now inflation is in fact in line. 1.8% keeps it basically in check of where it's been for the last couple of months. And so high inflation did not materialize, and so actually then it means that the Fed likelihood in initial reaction not going to be as aggressive on their kind of rate guidance, and so equities actually rallied. But it only took about, I think it was what, 8–9 minutes after, and then straight away Rex Tillerson fired by Trump, which apparently, according to insiders, no one in the administration saw coming, although they'd had some disagreement apparently on how to deal with the issue of Iran, which was underlying the main reasoning. But you can see here the market immediately spooked by the news, and we reversed all the way back to the pivot point of where we were pre the data coming out at that given point in time. However, as you saw, although this did continue, because there was a New York Times tweet that was saying who's going to be next, and actually the journalist said, according to someone close to Trump, this isn't the end of the sequence of shaking up his team. And so there's been quite a few articles about the 9 people Donald Trump might fire next. And I'd say when you go through this kind of list, they give you background behind why these people are in the potential firing line. But I'd say from a market point of view, some people obviously carry more importance than others. Jeff Sessions, you're probably aware of from a lot of this toing and froing about investigations into Russia and its association with Trump and pre-election. H.R. McMaster, rumours of tension between the National Security Advisor and Trump have been rampant for months. One of the other ones you might remember as well from a foreign policy point of view, Jim Mad Dog Mattis. I mean, you just can't make this stuff up really when it comes to some of these guys. But again, these are the sorts of people. The Treasury Secretary Stephen Mnuchin doesn't feature on here. He's probably a lesser extent, given that he tends to fall in line, I guess, with fitting with the Trump narrative. But such is, I would say, regular news. You start to get to the point of news fatigue. And actually now, the next person that gets fired, I think, is going to have probably a lesser and lesser impact now going forward, particularly because Cohn and Tillerson were kind of the remaining most senior people relevant for 2 reasons. One, Cohn, because of his background and his the fact that the market looked to him as the most respectable person within the senior advisory team, and for Tillerson because of the importance of, at this point in time, trade wars and geopolitics. And so now those two are removed, I don't think any of these other people could have really such a meaningful impact on markets. As such then, what we've seen in the market this morning is the S&P has continued to claw back a large portion of those losses from yesterday. We've already got to pivot. Again, I'll leave the technical kind of play to Sam, but obviously upside targets probably be looking at around this 83 3/4 level in the SPOOs on a retracement back to the lows that were seen back on Monday's session if we continue this upside move. So a little bit of recovery, and likewise the DAX has followed suit in sympathy. We obviously moved quite sharply lower yesterday, but we found some resistance thus far at pivot. Any breach of that level, then again probably looking at those other areas from what would have been Friday's support point and going back to the mid part of resistance from last week as well, if we did get beyond that pivot point. Okay, looking elsewhere at some other things. We have had Draghi talking this morning. He's speaking on an opening address at a conference organised by the Institute for Monetary and Financial Stability in Germany. As you can see on the charts, euro-dollar has moved lower, but cable has also. I've seen a couple people looking at his speech and are suggesting that Draghi said performance of underlying inflation remains subdued and currently sees inflation converging towards aim over the medium term as some of the reasoning for the euro weakness. I think that's pinning news to a move, personally, because looking at euro-dollar and cable, both pairs moving lower, and looking elsewhere in the crosses, this looks more like a dollar move and a bit of a dollar recovery rather than anything euro specific. One thing you can do, I know I've shown you guys this before, this is the ECB's home page. What I typically do is when I know, according to the media, the weekly schedule, I look ahead, and if you go ahead to today's meeting, so I do this ahead of when he's going to speak, I scroll down to today's speech. Here's Wednesday, Mario Draghi, what he's talking on, and importantly, the text will be made available on the ECB's website. So what I do is when it gets to 8 o'clock, there was no comments immediately run on any news wires. What I'll do then is I continually refresh this page, and then you see speeches gets updated with this kind of notification, and then there it is. And actually you can, if you're quick, get this statement a couple of seconds quicker. Typically what I'd normally do is shoot right down to the bottom to the conclusion, and when you kind of summarize the conclusion here, currently see inflation converging towards our aim in the medium term, and we're more confident than in the past this convergence will come to pass, but we'll still need to see further evidence inflation dynamics moving in the right direction, so monetary policy will remain patient, persistent and prudent. So that in summary to me is a complete repeat of the existing stance of the ECB. And when you go through, he talks a little bit here about the net purchases on the quantitative easing program. He said when progress towards a sustained adjustment in the path of inflation is judged to be sufficient, net purchases will come to an end. So if you remember from the last ECB interest rate decision, this is exactly verbatim copy-paste. So I don't think any of this euro movement you can put down to Draghi's speech. I think he's just reiterated what he said before. I think this is dollar strength more than anything. Hence, consequently, the move already reversed in that dip. Just having a look then at some other things to be aware of. This I thought was quite interesting. This certainly is not immediately market moving, but I wanted to run through with you a little bit of background context, because if you remember from the press conference we had with the ECB, there was quite a few questions about who's going to replace Draghi. But if you remember, Draghi actually is not going to finish his term. I think I had the date written down. It's something like Q1 of 2019. Oh no, October of 2019. So we're already talking about Draghi's successor, and he doesn't even finish his term until the end of 2019. Obviously, though, who takes the helm at the ECB is obviously pivotal, and one of the people that's been mooted as a potential replacement is this chap on the left here. So I know those of you in the market will know who this is. This, of course, is Jens Weidmann, head of the German Bundesbank, and he typically is seen as one of the most hawkish members of the ECB's governing council. Now, one thing is, well, let me just run through some of the details, then I'll give you a bit of overall kind of assessment on the situation. So, context is important, and what you've had is today, as I said, after 6 months, Germany now has a grand coalition in place, and Chancellor Merkel can now, rather than trying to negotiate and forming a coalition, that job is done. She can now get back to work, if you like. So Merkel's political partners say they're potentially willing to concede Germany in terms of the trade-off, a more influence on French President Macron's push to create closer ties among European countries. So party leaders are asked who not to be identified, because Merkel hasn't announced her plans yet, have basically said that Merkel could make a concession to European partners to concede backing of Weidmann to be the governor of the ECB. Now this obviously is quite a big deal, because if someone quite hawkish comes in to run the ECB, this is probably going to be more, a proponent of less stimulus, winding down QE, lifting the deposit rate from negative territory, so on and so forth, which would be detrimental then to a large portion of the southern European states. So in order to be more friendly and get more favours on political unity, Germany could say, okay, we will make a concession on that role as long as you help on other things. And so this obviously is perfect timing, because she's looking to go into talks now with France's Macron, where they're looking to get things back on track, having been sidelined by the German election outcome, in terms of formulating better, stronger unity of Europe, of course, going into the end of this month, when we're going to negotiations from a European perspective with Great Britain over Brexit. A few other things then to be aware of. If you're looking at Jens Weidmann, one thing that we have had more recently is you'll notice that Jens Weidmann has softened his tone quite considerably. If he was an uber hawk before, you would say he's more moderate now. A lot of people have read between the lines in 2017 that this is his kind of positioning, if you like, to make him more favourable and not such an outlier in his policy view in that sense. But again, this is going to be quite interesting because no fault of his own, but showing the political kind of crossing into economics and monetary policy, that Merkel actually in this situation, in terms of safeguarding her own and Germany's ability to have a greater say in European politics, might be to the detriment then of them running at the helm of the European Central Bank. So something just for consideration in the longer term. As a timeline, this probably isn't going to be a more concrete situation of who's going to be a replacement for at least another year, I'd imagine. But people obviously are talking about it already. Other news then, you've had China's industrial production beat estimates in January to February. So IP, retail sales, fixed asset investment, you can see all seeing a minor uptick. But again, no one's really focusing on this at this present point in time. And then you've had the API crude oil inventories overnight. This obviously the precursor to the DOE numbers we'll get this afternoon. Prices did move a little bit higher. And if we look at crude oil this morning, we have had a little push above pivot here more recently as Europe's come in. So you remember the data coming out an hour earlier than normal, so 8:30 last night, that was when it came out. If I just circle the price movement, and you can see here this morning we've broken that top end of the range seen overnight in the Asia Pac session. The 61 handle, basically pivot, also taken out, and we're just challenging the lower bound of that support points from back on Tuesday afternoon. So the data was mildly bullish in a sense that, again, the headline crude build was 1.1 million. People were actually looking for a build of about 2.5 billion, or million, excuse me. So although a build was smaller than anticipated, you had draws in Cushing, 12th week in a row for a draw in Cushing. Gasoline draw, distillate, biggest draw since October 2017. Looking at the calendar for this morning, I was talking to actually one of the guys here yesterday about this, and about when you're trying to kind of strategize for the trading day ahead. One thing is when you look at the calendar and you do your prep work kind of at the end of the previous day and you look forward to today, think about and ask yourself the questions: what is it that's driving these financial markets at the moment? So the two main predominant factors have been US economic data, CPI. We've got retail sales, PPI coming today. We've got other things coming later in the week. So US economic data, and then Trump, and predominantly this movement in his advisory team and key senior officials as part of his administration. So US and US. When you start looking then at the economic calendar, when there's nothing really of significance coming out in terms of economic data in Europe, well then essentially you've got to be thinking, is there going to be much trade opportunity from a more broader perspective, other than the market open, which offers its own kind of pickup in volume and some movement? Are you going to be better positioned to really focus your attentions to the afternoon? Because that is where the predominant amount of the action has come so far and is anticipated to continue to be that way. The market at the moment, from a sentiment perspective, and certainly this played out with the US equity move yesterday, and the frequency of news flow that can move the market, is definitely second half of our day being in London. So again, I just kind of have that in the back of your mind in terms of the aggressiveness of how you'd want to be trading the European morning, unless of course a good opportunity arises. Looking at this afternoon, obviously 12:30, don't forget, UK or US retail sales and US PPI numbers all coming out, and then at 2:30, not the regular 3:30 time because of the clock change in the US, you're going to get the DOE all inventories. A couple of speakers to be aware of, and it's kind of an ECB inspired morning. You've got Pratt speaking, Constancio, Villeroy all coming at various points throughout the morning, so just to be aware of. But given the fact Draghi's not really added, I don't feel, anything new, I would be expecting pretty much a similar from the rest, Constancio being the vice president. Alright, let me hand you over to Sam then, and he can wrap up things on the look around on the charts. Thanks guys.
Hi guys, good morning. Yeah, I would expect similar to yesterday, really, the morning to be quite quiet in anticipation for the afternoon, where it did pick up quite a bit more yesterday. Just looking at the pound, seeing as we're on it, you could see, well, quite similar actually to the euro, how we broke through, came back and sort of retested the overnight level support around here. We're just now, along with the pivot and yesterday afternoon's low, just finding a brief pause. If we were to go through there, and a level I quite like the look of would be the high that we made on Monday before breaking through on the data release yesterday, of course in line, but I think the market obviously wanted to see a much better release. Still got this trend line drawn on here. You can see using those highs, the level we talked about in the briefing. I guess, I mean, if you were slightly aggressive on that entry, well, using the zone, you could have got in on that, but of course the data, you wouldn't have probably held it around there. Also, just above Monday's high, you've got this point in the market using the high of the SIP to be aware of. So even if we do come down through this pivot, really, I think along with 139.36, really that's the level perhaps you would want to go to get the sort of the clearest trade and the breakdown through there. Levels to the upside, you can see we're contained by the double top from today and yesterday's high, which will be the key sort of level I think to consider for if we were to get a move high. I'm just going to see if we can get some sort of trend line on here. And there you go. It's quite interesting to see this kind of thing. I'm just going to remove the rectangles to clear it up. So we've had that break through there this morning, pull back, look at that. Was support, breakthrough, then find resistance. So quite technical today for the pound, which is quite encouraging to see that. So you can sort of use this to trust your technical levels from well, the market related ones anyway. As you can see, they have been, you know, twice already worked very well with the yesterday's high, the break of this trend line, and well, 3 times with this low as well, and the pullback. So very technical. The pound today. If we have a look at the euro, and I'll just go over what I was talking about, how it was similar to the pound. You had the break through the overnight sort of level support that we talked about. Let me just circle that up to make it a bit clearer to see, or rectangle it up. Had the breakthrough, come back, and I know Philip, you said you were long and got out around this point. So definitely good sort of trade there, using the previous level support turn resistance. If we were to continue to break through, it looks a bit more messy really than the pound does, and I think again probably better to wait for the afternoon to really get a proper trade in here. Would have a look to see if we can get a trend line though. Let's just have a look. I mean, that would be quite far away, but something just to bear in mind perhaps going forward. But we have to break through of the pivot, and now it's getting a bit choppy. And if you lower the time frame down, this is you can see in a bit more detail, just a bit of a messy area. It's not one that would make you want to go long. I mean, if you would say anything, probably likely to get another test of the low, having held resistance at the previous sort of level of support before being broken through. Levels to the upside similar to the pound, in that you've sort of almost got this double top from today and yesterday evening, although albeit we did break through a bit. Euro looks quite messy, to be honest. I think I'd rather wait for it to really get out of this range. The pound looks a bit better, and you can see from just what we've gone over there, technically looks pretty good. Today, have a quick look over Aussie dollar. Coming up to the R1, would expect a bit of resistance there. You know, we've also got the previous high from yesterday, and then above there you can see you've got quite a few highs. I'm just going to refresh this chart 1 second. Yeah, so even if we were to push above yesterday's high, you start getting into all the areas from the back end of February, and it could get quite messy. So the pound really sort of sticking out to me to be the better trade. In terms of levels to the downside, you can see why we found a bit of support on what was the previous highs. So if we were to come back down towards there, could be half interesting. Another week again, you can start to see the pattern from the Aussie dollar today. Let's just go through this. You can see where it's made a high, albeit very early on. You then get the breakthrough, comes back down to find support. Same sort of thing. Got a clear level of resistance, breaks through there to come back, and then find support as well. So we'll look to see if that pattern can continue with a trend to the upside, worth getting on a trend line as well to see, just for later, to see perhaps that gets respected. Or it might be that, you know, a bit of dollar strength comes into the market and you're looking for a break of this trend, and then you've got the key areas of support to look at as well. So Aussie dollar, I'd look to see how this trend line and this market trend that we're seeing this morning, where it breaks through the high and comes back, just to see if that can be respected going forward. Dollar yen, we put this on a bigger time frame just to have a bit more of a look. Pivots held quite well along with what was important area of support, turn resistance, so I'll be keeping an eye on that. And as well, if we do push through, you can see here, let me just mark that up, where we continued to push late last night, obviously with equities pushing down and the yen catching a bid here. If we were to come back to test this area, would be one of interest. Stuck within this range where you can see the highs and the lows have been tested a few times, so for looking perhaps for a cleaner trade, maybe a break of either the upside or downside would be a bit more interesting. And to the downside, yesterday's low could easily be tested if we were to get down there. Let's have a look if we can get some sort of trend on here, because you can see me using the high from yesterday. I mean, it's not amazing, but something to be aware of, I guess. Dollar CAD, so obviously we don't really trade the dollar CAD too much here, but you can see yesterday it took a bit of a beating, or to the dollar caught a bid to the upside here. Let me just mark up the key area of resistance that I was looking at yesterday. We didn't quite get there, but yeah, you can see here the 5th, the 7th, I'll be looking for perhaps another retest of that level. Having a little breakthrough, let's drop it down to 15-minute, starting to find a bit of support here. I'll be looking at this level as well. The dollar not really doing too much, but would be having a look to see if oil is doing anything, and it might be that we get a break of this area and get down towards the pivot. In terms of key areas of support from yesterday, you've got this point around 330 where the buyers really sort of took over on that second win. Obviously you've got this line drawn from the previous day, but also on that sort of 2 o'clock push. Let me just draw a line up here again with that S1, could be an interesting point. Do I think we'll get down there? Probably not, but we had a decent move yesterday, so not completely out the question, I would say. Equities in the US, we'll come over and have a look at the DAX in a minute, but obviously you would have come in this morning if not trading and seen a pretty decent sell-off there. We found good support last night. You can see how strongly respected that has been, and we're just pushing above the pivot for the S&P. The Dow Jones looking very similar, and the Nasdaq, which has outperformed obviously over the last few weeks, looking very similar though today to the S&P and the Dow, and that just trying to creep above the pivot. Nasdaq, I was sticking around in the office yesterday, and you can see what was Monday's low. We really struggled to then push above once we broke through. So key area for the Nasdaq that I'd be aware of. If we were to push on, then obviously you'd be looking at the Asian session low and where the sell-off really started to take off, I should say. But key area, the first one here, using what was key support, now resistance, and it'd be a similar sort of thing for the Dow and the S&P. In terms of if we just lower this down, if we were to continue this move that we saw from this level, obviously pivot could be a good target, but you can see, let me just mark this up, what was the Asian session high, we had a really decent breakthrough there. So if we were to come back and test, would expect a similar sort of reaction of that point. Quick look over at the DAX, you can see quite similar in terms of equity markets just catching a bit of a bid this morning, a bit of a retracement if you like. FTSE as well pushing higher, Euro stocks, yeah, just above that pivot. So key areas for all of them looking pretty much at what was the low on Monday, having broken through. Euro stocks here, I think this looks technically quite nice if we were to get up to that point. But it might be, if it gets on there on cash open for the US markets, and you want to sort of hold off for that sort of frantic period of time. But technically, definitely levels I would have on the chart. Oil, topsy-turvy day, not completely out the question to expect that again today with the data. out at an earlier time. Just going to mark up the key sort of highs and lows of this range. I would say, well, we haven't really had a test back of what was the previous high. So 60, 98 and 61 at pivot level, something to consider there. You can see even when we had a bit of a break of this downward trend, it got quite messy, and that is sometimes the case before a data release. Yesterday's low, as with equities, was sort of a double bottom as well. I prefer to wait for it to really get out of this trend. Key level to the upside though, 61.41. You can see what acted as a bit of support before we really started to push on. So those trading oil, the next sort of key area, 60.98 for me to the downside, or if you want to be super safe, looking at 60.89, and then to the upside 61.41 interests me quite a bit. You can see why we've found resistance at this point. Was respected quite well yesterday, but we had, as you see, broke through twice, once to the upside, then to the downside, but respected for now in the low volume sort of period of that morning. So it would definitely be an area I'd still consider to have on. Have a quick look at gold to wrap things up. Let's have a look at the bigger picture. You can see there quite a big range to the upside. It really did fail to push above that previous high. I'm just going to refresh the chart again. And then you can see the downside just sort of stuck within that range. Key sort of resistance point, albeit not exactly to the tick. I think from a safer sort of trade, again, waiting for that range to break might be the trade to wait for. As you can see, if we were to come back down to the pivot, and if I just draw a line where that pivot is, you can just see how sort of messy this area has been, and predicting what would happen at that pivot, I'm not sure would be the easiest thing to do. So I'd rather just sort of wait for the afternoon, clear direction. Maybe the data gives us a bit more directional comments from Trump, who he's fired next or brought in, could really sort of lead the markets. In terms of the sentiment, I think at the moment, understandably, you can see equities pushing higher, but just bear in mind those resistance areas for all of them. Basically, Monday's lows are the ones to be aware of. The dollar not really doing too much. Keep an eye on the pound near that low, but you can see it's held quite well, and still that resistance on that second test has as well. Euro, similar kind of thing, just stuck between what was the low from overnight and this area of support as well. Any questions, as usual, please do get them in the chat, and just before all the data releases in the afternoon, I'll be sort of commenting again. If I don't speak to you though, have a good trading day.